Hello everyone, welcome to the IchimokuCharts.com daily analysis for the S&P 500 for Monday, December the 13th, 2010. Well, a continuation of the trend to the upside today, and we have a candle making a higher high and a higher low. Not a terribly bullish candle, not the sort of candle that we'd like to see as the market's trending up. And we now have a change of characteristic in the trend with a candle with a red body, and in the previous 3 days we had candles with green bodies, which denotes the buyers making net bullish progress on the day between the open and the close. Today a red body denotes the sellers making net bearish progress, so a change of character and perhaps setting the market for a change of trend to the downside. The shadow on the top of the candle is another factor that suggests that there could be a change of trend. We've had the buyers lose commitment as they traded the market up towards the high, and they were unable to maintain the market up around those levels, which is what you like to see as the market's trending up. We can see here on these 3 previous green-bodied candles that the market was closing up towards the highs. So the buyers were very committed. Today we've had a loss of that commitment from the buyers. Now they've also closed the market down towards the low. So that also suggests that the sellers took control at the end of the day. So there is a chance that we may have a change of trend to the downside. Now, if we do have that change of trend, obviously we do need to watch the low of the current candle for a potential lower high and lower low. We always need confirmation of a change of trend. And if that does happen, then we should look to this area around 1228, where we had this major high and this tweezers top. And we should look to that area for potential support. Areas of previous resistance have a very strong probability of turning into support, so that's a very important area. Just down below there we have this previous support and resistance area around 1219 as well as a potential area of support. And down below there we have the Tenkan Sen and Kijun Sen at 1216, 1209, below there the round number 1200. All the way down through to some very important levels that are marked, and the cloud, a very large area of cloud where the market can find support. So very, very strong support down below. To the upside, however, there isn't any strong resistance until the market trades up to around 1265. So there is potential for this market to rally potentially another 20 points or so. Now, we could have a Santa Claus rally. There is a good chance of that happening. But today, a warning with the short-term characteristics, what we read about the bulls and the bears in the candle, not supporting the trend to the upside, so we do need to watch that. Now, in Ichimoku charts terms, we are trading up above the clouds, and the market retains its overall bullish bias, and trading up above the Tenkan Sen and Kijun Sen, so the market is bullish in the fast-term and medium-term timeframes, and both of those indicators are pointing up fairly sharply, reflecting strong upside momentum. Now, the market is looking a little overextended because we are a fair distance away from all of these Ichimoku indicators. And when that happens, there is a possibility of the market coming back towards these indicators. These indicators represent equilibrium in their various time frames. And we know that markets move between disequilibrium and equilibrium. They actually move like a rubber band, where the rubber band becomes stretched and then it bounces back towards a normal state. And that normal state is defined by these Ichimoku indicators. We also had the crossover of the Tenkan Sen above the Kijun Sen, which is a bullish signal, and that happened a few days ago. And that's occurred above the clouds, so that is quite a strong signal, and the market has gone on with that signal, although, as we've said today, there is potential for a retracement. So obviously for the next day's trading, the low of the current candle becomes very important, roughly around 1240 for a potential lower high and lower low, but we do need to watch the high of the candle, and there is still potential for the market to continue trending up to the upside because that trend in the first time frame has not changed yet.